Good morning, degenerates, and welcome to another episode of Boring Crypto IO, the place where I read you the boring crypto news every morning, Monday through Friday, just so you don't have to. My name is not important, and boy is it boring, guys. I am scraping the sides of the barrel to find you anything worth reading or any news worth reading. Let's get into it. Jacobi, spot Bitcoin ETF classed as environmental investing by issuer. And the top of the shit pile. SEC charges podcaster in first unregistered security sales claim against NFT offerings. The SEC is walking a real fine line when it comes to what they're trying to classify as securities, because they're getting to a point to where they think everything is a security. If an NFT is technically a security, that means anything is. A pair of Jordans, Beanie Babies, Pokemon cards, coins, paintings, anything that's a collectible could technically be a security. And they're really throwing their weight around with this stuff. So we'll see what the Circle has to say. It's not looking good, though, to the market. Guys, current market cap right now sitting at 1.05 trillion, up 0.10% from yesterday. Current Bitcoin dump sitting at 48.3%. ETH dominance at 18.9, and Gwei is sitting a little high at 26. Fear and Greed still sitting at that 35. Right now, guys, guess what? Oh, weird. Moving sideways. Nothing's changed. We're going to blow through the top 100 super fast because literally nothing's going on, with maybe some outliers here and there. 2.52 on the up for Polkadot. 2.36 on the up for Ton. 3.32 for Avalanche on the up. 4.59 on the down for Hedera H-bar. Going down. Lido down 2.85. Crow down 3.13. Again, nothing new, guys. XDC pumping 8.28%. I don't know what XDC is. I might want to look into it. MakerDAO down 2.25. Algo down 2.33. Injective down 4.31. INJ keeps correcting, guys, and I'll tell you what, I'm gonna. If it gets to like 6, I'm going. Excuse my language, but I'm going balls deep in injective if it gets down to $6. Just letting you guys know what I'm looking at. Any other big outliers? 2s and 3s aren't really important. I don't even know why I'm reading them. Sui down 5.41, down to 51 cents. 4.47 for Pepe, still bleeding. Yep, that's it. That's it, guys. All right, Bitcoin, 4 hour. Nothing. Guys, nothing new. I am not going to read into this at all. I'm just going to say what I've been saying for the last couple of weeks. If we lose if we lose 25.816, keep your eye out for 25.6, 25.2, and 25. If we lose 25, look for 24.2. To the upside, here's the thing. There's nothing, guys. There's nothing. I don't care what any influencer, any trader that thinks he's the shit could tell you right now. There's nothing telling us which direction this is going to go. Literally nothing. This can 100%, or well, I guess I would say 50%. You're looking at a 50-50 move to the upside or the downside. There is nothing telling us what this thing's going to do right now. So if we do go to the upside, we have to break this 26.315 as resistance. We have to flip that into potentially support and continue going up. If we do break it, and just run, hopefully we can get past this 27.3. If we flip and bounce, we could potentially range here for a little bit. But if we're talking to the upside, we've got to get past this 27.3 and so on and so forth and turn that into support. The goal is to completely reverse this giant, nasty low volume node that just ripped all the way down. So we have to get back up into the 28.9 range to 20, I'll say 28.6. Somewhere in here, and turn this into support to continue moving up to the upside. That's it, guys. That's literally all we got going on for Bitcoin right now. This is a Bitcoin 4-hour. It has nothing going on. And I'm sorry, that sucks, but I'm not going to lie to you and spend 20, 30 minutes on charts when there's nothing to look at for Bitcoin. It is boring. It is stagnant. Welcome to the bottom of a bear market. Or the potential bottom, I should say, I guess. Yeah, get comfortable. We might be here a while. All right, on the news. Jacobi spot Bitcoin ETF classed as environmental investing by issuer. The Jacobi FT Wilshire Bitcoin ETF has been defined as an Article 8 fund by its issuer firm. The first ever spot Bitcoin exchange chain, the first ever Bitcoin ETF launched on the European market has been classed as an Article 8 fund by its issuer firm, London-based Jacobi Asset Management. Fund included under Article 8 of the European Sustainable Finance Disclosure Regulation, the SDFR, are those that promote environmental and or social characteristics. On August 29th, Bloomberg reported that Jacobi Asset Management had classified its Jacobi FT Wilshire Bitcoin, God, what a freaking mouthful, Bitcoin ETF as an Article 8 fund. The fund launched on the Euronext Amsterdam Stock Exchange on August 15th. Becomes the first Bitcoin ETF traded in Europe. US is slacking. And the first to have the European Union Environmental, Social, and Government Investing Rule applied. The report cites Martin Bednall, Jacobi CEO, who calls the ETF fully decarbonized for its partial investment in renewable energy certificates, RECs. However, academic experts question the journalist questioned by journalists posed a contradiction, which Bitcoin's mining energy intensity, the ETF should purchase such a high amount of RECs that it would not only match but exceed the volume of energy consumed by Bitcoin assets. Jacobi FT Wilshire Bitcoin ETF went live more than a year later than its planned launch in 2022. The introduction was promoted as the primary spot or physically backed Bitcoin fund providing investors with an opportunity to access a financial product supported by actual Bitcoin. From the outset, Jacobi Asset Management emphasized the eco-friendly nature of the ETF. The fund uses outside information to calculate how much energy the Bitcoin network uses. It then purchases and retires our RECs. These certificates are tracked on a blockchain service, which is designed to let investors confirm the fund's environmentally friendly statements. Whoop-de-doo. I don't think anybody really cares. We all know the environmental impacts of Bitcoin is like that argument. If you've been here a while, you know that argument's bullshit. Bitcoin's harmful to the environment, but none of the other banking systems or corporations or entities are. Right. Get the fuck out of here. Okay. SEC charges podcasters in first unregistered securities sales claim against NFT offerings. Like I said, if they are starting to try and call NFT securities, we're in for a shit show. Impact 3 produces entertainment and educational podcasts and was trying to build the next Disney when it invited investors to purchase its NFTs. The United States Securities and Exchange Commission, SEC, has charged a media and entertainment company with conducting unregistered security sales when it sold NFTs to investors between October and December of 2021. Impact Theory, a Los Angeles-based company that produces entertainment and educational content, including several podcasts, allegedly raised almost $30 million through the sales of NFTs. It's called Founders Keys, which were offered in 3 tiers. The company encouraged potential investors to view the purchases of Founder Keys as an investment into the business, according to the SEC. That might be their hang-up right there, however they worded it. Impact Theory emphasized that it was trying to build the next Disney, and if successful, it would deliver tremendous value for the Founders Keys purchasers. There's their hang-up, you fucking idiots. Sorry, you're dumb. I don't know what to say. You wrote that into your contract that buying the NFTs could potentially be an investment, or however you said it. If you use that wording, that's what got your ass in trouble. The SEC found that NFTs were investment contracts, and so Securities, and the company violated the Securities Act of 1933 by selling them without registration. It issued a cease and desist order that Impact Theory has agreed to. Under the SEC order, the company was ordered to pay a total of more than $6.1 million in disgorgement, prejudgment interest, and civil penalty without admitting to or denying the agency's findings. Further, a fund will be created to return money to investors in Founders Key NFTs. Impact 3 will destroy all Founder Keys in its possession or control, publish a notice of the order on its websites and social media channels, and not receive royalties from future sales of the NFTs on secondary markets. Not good for them. According to NFT stats, a legendary top-tier Founders Keys NFT last sold 2 days ago for $1,468 as one of 10 sales in the last week. The token supply is 13,572 with 4,620 owners. The Founders Key is only one suite of NFTs the company offers. The company did not respond to a Cointelegraph inquiry by the time of publication. This was the SEC's first enforcement action involving NFT. SEC commissioners Hester Pierce and Mark Ueda wrote in the dissent of the action, the NFTs were not shares of a company and did not generate any type of dividend for the purchasers, they wrote, adding, "We share our colleagues' worry about the type of hype that entices people to spend almost $30 million for NFTs seemingly without having a clear idea about how they will use, enjoy, or profit from them. The legitimate concern, however, is not sufficient basis to pull the matter into our jurisdiction." Yet the SEC went through with it. That's my addition. The promises made by the Impact Theory and cited in the SEC order are not the kinds of promises that form an investment contract. The commissioners compared the promises made about the NFTs to statements made by sellers of collectibles. Exactly. They went on to suggest a list of 9 questions the agency should consider before purchasing NFT cases or pursuing NFT cases. Regardless of what one thinks of the Howey analysis, this matter raises a large question which the commission should grapple before bringing additional NFT cases. Okay, so this is what keeps happening. Hester Pierce and I'm assuming Gary Gensler keep butting heads on this bullshit because Gary Gensler is just, he's got it out. He's trying to be the big swinging dick and he's not. Well, they won this one, or they settled this one. These guys didn't even fight it, and I believe that if they didn't put that type of terminology into trying, I guess, the marketing of these NFTs, they wouldn't have gotten their asses handed to them. And Hester Pierce is, they're correct. This stuff collectibles don't meet the Howey test. It's absolutely insane. Almost any physical item at that point could become a security. You can literally buy, I shit you not, you can go buy cleaning supplies, Windex, Lysol, whatever, at wholesale prices on Amazon, expecting an investment, or expecting to make money off of them, I should say, and flip them at a flea market or something like that and make a profit. At that point, you're starting to tiptoe very closely to what the Howey test is, which again, like I said, can start considering anything to be a security, right? I don't think anybody buys a lot of this stuff expecting to not try it. Like baseball cards. Fuck, man. Who buys baseball cards for fun? Just to have them? No one. You're buying baseball cards and football cards, sports memorabilia, things like that, to potentially get a good player, you know? Like Pokemon cards, like I said, Yu-Gi-Oh cards, all this shit. You're trying to flip it for money, man. Anyway, that's my take on it. What do you think? Comments down below. Does anybody watch this channel? I just talk to myself every day. 5 days a week, I'm talking to myself. Anyway, let's look at Bitcoin. Not that it matters. One last time. Nothing. Sorry. All right, guys. That's it. That's all I've got for you this morning. Nothing crazy because nothing's going on. Per usual, if you do enjoy the content I provide for you here every morning on Boring Crypto IO, please by all means subscribe to the channel, turn on the bell for notifications, watch, like, share the videos on all your social platforms. Please like the videos. Can we get more people to look at this channel? It's just news. I mean, I know it's nothing crazy, but would you rather me show you some dog shit that you don't make money on and you get pissed off at me later for, or just give you the news of what's going on in the space? That's why I do that. Some food for thought. All right, guys, I will see you bright and early tomorrow morning. I am out of here.